Okay, so I'm just paging through this document. I was trying to see if I can find anything on the restraint of trade because I know that was the last thing we spoke about. Did you find
Mm.
anything, or did you address that
I did
question
look.
in terms of content?
Let me see.
Because it must
I
be in
have
here, but I just
sticky
don't
notes.
know where they'll be covering it in your specific textbook. It's normally a theory related question, but it's just good to
I
know
did.
where these things are in your textbook so you can refer
I
to
did
it.
look through it. Got the fraud triangle, restraint of
Yeah,
trade.
it's fine. I was just, while I was waiting for you, I was just paging through this just to see if I could find anything that we could just relate that to what we spoke about. But it's fine. It's not a train smash.
I,
You've got the
I don't
solution to it
really.
in the memo,
Yeah.
but obviously the memo would speak to the content, the theory. So ideally, you'd want to use the theory in the textbook because that's what they're
Yes.
prescribing to then answer questions that come up. So generally, you would want to bookmark those specific pages that are important from a theory point of view, so you can quickly reference and revise it. It's always helpful. Okay, I see bad debt here. Yeah. Um, I'm not too sure where they would have covered it. It must be somewhere in this document. Okay, but anyway, I'm glad you're feeling quite confident. You said you obviously went through another question and it actually went quite well, and you reviewed it and you could
Mm.
see where you made certain mistakes. That's brilliant. Just having said that, you don't have to worry if you're not getting the question 100% correct. Remember, each question
Yeah.
will have a certain number of marks allocated for everything. So as long as you're getting at least 60 to 70, maybe even 80% of the question complete and correct, that's obviously where you should be. It will be difficult to get 100. I mean, it is possible, but obviously very challenging. So as long as you're getting the majority right, you should be getting all the easy things correct. You don't want to throw
Mm.
away any easy marks. So if you're getting the bulk of the question correct, that's good. Obviously, you said you left out one or two things, which is going to happen. I mean, it's normal. It does happen from time
Mm.
to time. So don't worry too much about that. Just focus on the main workings, calculations, the bulk of the question, because the bulk of the question will be possible, it'll be easy. And then obviously there will
Yes.
be about 20 to 30% of the question that will be difficult, and obviously they're catering for the distinction students. All right, so yeah, just
Do you
keep
think we're
that.
moving at an okay speed, or should like I be doing more past papers and stuff and other things?
Yeah, it depends on you. Obviously, you should be doing as much as you possibly can, but
Yes.
definitely focus more on questions and answers. So, like you said, you did a question, you checked the question, and then you reviewed it. And then we need to see what are the problem areas because, yeah, we don't have much time. We've only got tomorrow, which is Monday, Tuesday, Wednesday, and then you basically write
Mm.
on Thursday. Yeah, so we said it yesterday as well that there isn't that much time, so you need to use the time as effectively as possible. So, in other words, literally go through maybe more November exams just to get a better feel for the standard and for the questioning that's going to come up. Because you are going to be writing an exam, not a test, because the tests have been shorter, and those tests obviously might be a bit easier, depending
Mm.
based on your past tests and exams that you've seen. All right, so yeah, so I think maybe just try revise concepts, but
So
concepts that are specific to certain topics that you know are more likely to come up than not. So, for example, PPE is definitely going to come up. That's like a given, it always comes up.
yeah.
It's one of those topics that will come up. So,
So
you need to make sure that you're okay with everything that relates to PPE.
so I did search the restraint of trade. I think they're talking about it in specification to the question because here in the answer it says it's an intangible asset. So we were just supposed to say like, is it an
Yes.
intangible asset or not that?
Yeah, we
So I
looked
was
at
like,
that, so
oh,
that was
okay.
fine. So yeah, I don't disagree with the answer. The answer's fine, but as I said, we just
Hmm.
need to relate that to your textbook because I want to know like where did they reference that from because it must come from your study material. So it should be somewhere
Mm.
in this document, this textbook.
Um,
Yeah, but it's fine. If we can't find it, it's not a problem. You just need to,
maybe it should be under intangible assets then?
yeah, but there is no section for intangible assets. There's maybe assets in general, but I don't see a, yeah, so different textbooks structure the content differently. So in other textbooks, there might be a chapter covering it specifically, but yeah, in this textbook, I didn't see that. So yeah, and I'm paging through it very quickly. I'm just trying to scan through and see if I can find anything. All right, but yeah, I'm going to stop doing that now. I'm just going to go back to the beginning. Okay, so today, what did we say we're going to do? You wanted me to go through those other questions, right?
Yes.
Okay, so
The
from the
so
paper
we
that we're
can
looking
do
at,
yeah, we can
yeah,
do the suppliers reconciliation.
yeah. Okay, so this was the
Um,
restraint of trade question, that's theory. And then what's the next? Okay, vehicles. This was the restraint of trade. Okay, so here's the vehicles. Here's that note, right? Yeah, it is a note.
mm.
And then you've got the
And
suppliers
then
recon.
if we
Okay.
can, maybe just ratios.
Yes, yeah, ratios are actually nice. So you should be
Yeah.
hoping for them because they just require formulas, that's all. And then literally, it's a matter of calculating and interpreting. So yeah, if they give you more ratios, this was good. They're obviously leaving it open as well. So one of them require you to provide the ratios. The other one, they're specifying which ones you need to use. So solvency only. All right, but yeah, we can look at
Mm.
this. Yeah, I'll try move a bit quicker so we get through more of it. So let's see if we can try wrap this paper up and get what we need to do
Okay.
done. All right. So again, approach is very important. So let me go. Where's my Excel spreadsheet? Okay, here. I'm just gonna use a new tab here. Let's go exam November 2020. This will be continued. I'm sure I continued. Okay, so next page. All right, so let's just put a heading here. Okay, all right, so what question are we looking at? Is it theory or is it practical? It is practical, do you agree?
Yes.
Okay, so what do you do when you get a practical question in terms of your exam technique?
We first read through the extract.
No, remember the reading you would have done during the reading time.
Yeah.
So you should be
Um,
familiar with the scenario because you've read it already.
yes, we look at what needs to be answered,
Yes. Okay,
I
so you
guess.
have to look at the required. The required says prepared an extract of the PPE note to the statement of financial position at that date, showing only refrigerated trucks. Total columns and comparatives are not required. So what is this? It's a note. Do you agree?
Yes.
Okay, so what does the PPE note look like? Well, this is something that you would have studied or you would have looked at in your textbook. So with the PPE
Mm.
note, you've got the cost, you've got the
And then you have the
accumulated
accumulated
depreciation,
depreciation, the carrying
then you've
amount.
got movements during the year.
Yes.
And the movements could relate to additions, depreciation, disposals at carrying value.
Mm.
Okay, so this is the template you would have studied, you would have learned, you would have known. I need to put one more line here. Okay, carrying value. And that would be beginning of the year. And then you would have the same thing at the end of the year. So literally, draw up your template. Okay, obviously there's only going to be one column.
Mm.
And that one column is covering, what did they say in the question? Trucks.
Trucks.
That's it. All right, so you're
Mm.
not going to need to do anything else. Okay, in other
Is it
words, you're
weird I'm
just going to,
excited for this paper?
pardon?
Is it weird I'm excited for this paper?
Which one? The one on
I don't know if
Thursday?
I'm, yeah, I don't know if
Okay.
I'm going to do well or not. I'm just excited for it.
Yeah, no, that's good. That's the right attitude to have. Like I said before in one of our sessions, you need to go into that exam like pumped up. Like you need to build yourself up in terms of confidence and you need to tell yourself, I'm going into that exam, passing that exam, and that's the objective. And then once you feel comfortable with what you've done, and this will happen during the exam, then you need to change your attitude towards, okay, now that I've passed, now I'm focusing on that distinction. Now I'm going to try go for that. So yeah, you just need to approach it with a positive outlook. Okay, be optimistic, and obviously, if you are in the right frame of mind, you should generally do well. Okay, worst case scenario is being anxious, being unsure, and if you are anxious and unsure going into the exam, generally the exam isn't going to be as pleasant because you're gonna get all nervous, you're gonna feel anxious. It's just not gonna go well, right? So rather just be confident with what you do know, go into the exam knowing what you do know, and tackling it and basically saying, well, I'm happy with what I know, and with what I know, I'm confident that I should pass. Okay, obviously doing all the works, the calculations in context. Okay, looking at the test question that they give you, and then you should be fine. So yeah, so well, based on what you've seen, you kind of know what the exam is going to entail. It's just a matter now of executing. In other words, getting everything that you need done in that particular question. All right, so here's another question. This isn't so bad actually, because they're only asking you about one asset. Does that make sense? Right, so you don't even have to worry about all those assets we looked at here. Okay, remember we spoke about the buildings and what is it, the truck or the bakkie that they exchanged and stuff like that. That was yesterday's content, right? So none of B is going to affect D, right? Because D is separate and they're only asking you to look at the trucks. Well, then you can focus your attention, wrong page, this one. Then you can focus your attention on the vehicle. So, oh yeah, we did look at that. That was the restraint of trade. So this is the next bit, eh? Okay, so here they said, please assist with the vehicle transactions that occurred during the year. The details are below. Let me know if you have any further information. Okay, so you've got lots of bullets here. Okay, so this is what you would have been reading during the reading time. So you would have read this already. I'm just reading it because we haven't looked at it yet. So on the 1st of October, 2017. Okay, so that's an important date. Always, dates are important. So you need to look out for those dates, any dates. Remember, timelines are important, and I would also draw one here because this is looking at disclosure, all right, because it's a note. And in a note, you're looking at what happens during the year. All right, so again, same approach. You don't change the way you do things. Obviously, the questions change, but you're still going to follow the same procedure. So in other words, start, end. Maybe let me move this up because you might have previous months or years to consider. Okay.
Hello?
All right, so that's the start and the end. Draw the timeline. Ooh, looks like there's a slight problem with the connection. Let me
I can
just
hear
check.
you now, though.
Okay, can you hear me now? All right, that's fine. I'm just checking. Wi-Fi looks stable. Maybe there was a slight glitch there. Okay, but yeah, all I was saying is just draw up the timeline. What's the dates going to be?
Mm,
We saw it earlier.
so,
Year end.
and
So 30 September.
think
The year
that's,
end won't change.
yes,
So if you've
30th
done
September.
question B, you should be fine with that. 30 September, right?
Yes.
Okay, so start, end. Right, when did we buy this vehicle?
On the October 1st, 2017.
Yes. Okay, this was 9.2 million. All right, the motor vehicles had a total useful life of 5 years and a residual. So residual 5 years. Okay, remember, everything I'm doing here, I would do in my exam. This is not a waste of time. This is going to give you marks in terms of workings. Sometimes they might even award marks for this because there might be certain things on this diagram that you've calculated that they haven't asked you to calculate, but it's part of another working. So you don't you don't need to worry about this. Don't draw all of this on the question paper. Do this on the answer sheet because you're going to hand this
Yes.
in and you want them to look at this. You want them to mark it because this is part of
Yes.
all of that. That's part of the exam technique. Okay, so this is 100% valid and relevant and possibly even going to give you marks. Okay. All right, so you've got that, you've got that. Next bullet. During the current period, there was a significant drop in the value of the refrigerated trucks due to the introduction of more technology advanced refrigerated trucks. So what are they talking about here? When trucks lose value because other things come out, what do you refer to that as?
When trucks
This is theory. That comes from your textbook. That comes from your PPE section. What happens
the
when something loses value because of other unrelated topics or reasons?
isn't that just depreciation?
No, it's not depreciation. Depreciation is a loss of value due to use. So when I use something, it loses value because I'm using it.
Okay.
What's the other thing?
Reduction. Wait, hold on. I know this. When stuff gets like old, it's outdated or something like that.
Yeah, what's the other one? Impairment.
Impairment.
Okay, an impairment is a loss of value due to other factors, factors that you did not consider. In other words, not because of use. Okay, so you use the vehicle loses value. Okay, if the vehicle, if a new model comes out, or if technology advances, or if something happens in the market and those vehicles lose value due to unforeseen circumstances, then that's considered an impairment. See, that's theory. That comes from the textbook.
Excuse me. Sorry.
Okay, does that make sense?
Yes.
Okay, so that theory is what I'm referring to in terms of revision. So as long as you know what that is, then you should be okay. Then you can address it in the different questions. If you don't know what that is, then I would advise just revising and going back to that section in the textbook and just going over that section. It's not a difficult thing to look at, but you do need to understand what it is. So obviously this bullet point refers to that. Okay. All right, what else do they say? The trucks preserve products by keeping them cold for longer in the original state are designed to prevent road accidents using advanced GPS. At year end, the useful life and the residual value of the original fleet of trucks was reviewed. It was deemed that there was no change. Okay, that's just basically telling you that everything you expected is still in line with what you had at the beginning when you purchased the asset. The fair value, okay, so here's something. All right, what is this?
Sorry.
Fair value.
Yes, ma'am. Do we have any topics? You can use the one I used. I have my survey open there, so you can. Because they tell you can't. Okay. This is a lesson. Um, okay, all right. Sorry, my brother has like something to do and he has not done it.
Okay.
So my mom and I are trying to help him with it, but he's very useless at this
Okay.
point. But yeah, sorry.
All right, so this fair value is related to the truck, and that's at 30th of September, which is there. All right, the cost of bringing the trucks into a condition for sale was 450. Okay, that's something else.
50.
That's the cost of bringing it into a condition for sale. So, all right, so you've got the fair value. Okay, remember the fair value is basically willing buyer, willing seller, right? Market value,
Yes.
technically. Okay, but then there needs to be, inverted commas, costs. Okay, those costs are related to bringing it into a condition to sell. So you can't just sell this thing as is. You actually need to fix it, basically, or improve it. Well, improve is not the right word, but get it ready to sell. Does that make sense? Okay, so those are costs for resale. Okay, what else did they give you in the question? Okay, there's more. The following are the estimated future cash flows from the refrigerated trucks. Oh, okay, so this is time value of money. You've got cash flows. All right, so they've given you 2021 in 2022. That's when? That's after.
Yeah. And sure.
All right, so future cash flows. 1419729. Okay, so those are your future cash flows. Okay, what did they say here? The market rates. Okay, this is for the time value of money. The I is 10.5%. Okay, and then that's it, eh? Yeah, that's the end of that bit. Okay, so you've basically read everything. Let's just go up to the top where it started here. Okay, so you've drawn a picture. Everything's on the picture. All right? You're drawing up this note. Okay, so this PPE note obviously needs to highlight the costs, the accumulated depreciation, the carrying value at the beginning of the year. The beginning of the year you can actually insert now because you know what it is, because you read the question. And the end of the year you know what that is. Okay, now we need to put in the cost. So what was the cost of this particular asset?
The cost for the is it 9,200? 9 million?
Well, that's what you purchased the asset for. Okay, we also need to look at, does this question have anything related to VAT? I see VAT here.
I see excluding VAT
But
at the
they didn't
bottom.
say, but the purchase price, if they did they say this is a VAT vendor? It should
Yes,
have
I think
been
they
part
did.
of the longer question.
They are a registered VAT vendor.
Were they, hey? I think
Not
we
the
looked at this yesterday as
the
well.
yeah,
Yes.
it says that they're a registered VAT
There we
vendor.
go. Okay. Obviously, that's
Yes,
something you
looking
would
at
have.
things, yeah.
That's something you would have read. Okay. Previously, does that still apply?
Yes.
Of course it does. Okay. So, what do you disclose in your accounting records? Exclusive or inclusive?
Exclusive.
Why?
Because VAT has a separate control account.
Yeah, and VAT is claimed.
And you have to pay it or claim it from SARS.
Exactly, VAT is claimed. Okay, so let's see what that would be. Do you know how to work out VAT? Let's test your workings. This is maths.
So if does the cost have VAT? Because if it doesn't have, if it
It's
has VAT in
purchased.
it,
It's purchased. It's purchase price. So what do you pay when you buy a truck?
ah, okay. So you do okay. So it said, see, they're using fancy words. Yeah. So it's just times 100 over 115, right?
Yes. Okay, that's work out exclusive. Okay, so that's the purchase price. Does it make sense?
Yes. Sorry, could I just go to the bathroom
You need
quickly?
to go. Okay, let me just pause the
Yes.
video and stuff. Okay.
Yes.
Okay, so obviously the diagram is important from a test perspective, so you need to draw the diagram. We calculated this, which is the cost. Okay, so that's where we are. So bullet number 1, tick. Okay, next bit.
Yes.
In terms of disclosure, remember we're at that point in time. So how many years have we had this asset for?
2017, 2018, 2019, 2023 years.
No.
Wait, what?
17 to 18 is
Oh, yeah,
1
wait.
year. 18 to
Yes.
19 is 2 years.
2 years.
Okay, you can't make silly mistakes like that in the exam. Eh? You need to count the years properly. If you went with
But
3,
isn't
that's
the year
wrong.
end of 2020?
No, you're looking at the beginning, aren't you?
Oh,
Where
yeah.
are we in terms of time? Here.
Oh, yeah. No. Okay, yeah. Sorry, I just thought we were counting from here. Never mind.
Okay,
Sorry.
where are we in terms of time? Here, 1st October.
Yes.
So when did we buy it? 2017. So from here to there, how many years?
2.
2 years. Okay, so we've worked out the cost. We need to work out the accumulated depreciation. Right, so how do you do that? Well, you need to determine how long is its useful life. Okay, that they gave you in the question. Okay, they did give you a residual. Okay,
5
this is
years.
theory. What do you do with the residual? You should know.
You take the cost, you subtract the residual.
Okay, yeah. So you
Um,
never, ever, ever depreciate the residual value because the residual value isn't going to be inverted commas used. So it isn't taken into consideration when doing the accumulated depreciation calculation. Does that make sense?
yes.
Okay, so this working is, what is the cost?
You know what adulthood means?
8 million
Mm,
minus the residual. Does that make sense? That gives you the depreciable
yes.
value.
The depreciable value.
And
That's
then
what it's called.
times how many years did you use it for? 2. How many years are
Two,
you depreciating it for? 5. Does that make sense?
five. Yes.
Okay, so there's the working. All right, that's at the start. Okay, we've got the diagram. Let's put that in our table. Um, okay, I need a bracket. 800,000, not 800,000, 8 million minus 800,000. Okay, close bracket times 2 over 5 gives us that figure. Right, and then obviously carrying value you should know, cost minus accumulated, right?
Mm,
Okay, right, now we need to look at movements. Okay, so let's look at the diagram. What happened during the year? Do we still have this asset at the end of the year?
mm, no. Wait,
Yes, we
hold
still
on.
have the asset at the end of the year.
Yes.
We didn't sell the
Hold on,
trucks.
I'm reading.
Did we sell the
Yes, we do
trucks?
still have the asset. No.
No, we didn't sell the trucks, so there's no disposal here.
Mm,
Okay, so there's 0 there. There's no disposal. Depreciation, there will be. Did we buy more?
no.
No. Okay, so in terms of disclosure, you're not going to show any additions or disposals. Right, you do need
Mm,
to show depreciation because you used the asset. But
yes.
also, there was a note here about, where was it? Where's that impairment thing? Oh, it was here, hey? No,
Yes.
that was the normal life.
The impairment was the truck's preserve
The
products by keeping
technological
what
thing,
did
hey?
the there's a
There's
I
it
think
there.
it's
There we
bullet
go.
three.
Yeah, bullet 3, yeah. Okay, there's that point. Okay, so here we have depreciation and we have impairment. We've got both. Does that make sense?
Mm,
All right, so let's work out the depreciation. Are we using straight line here? Looks like we are,
I think so.
because they said useful life was 5 years, and they didn't say
Mm,
that you were using diminishing balance. We need to check this actually. I'm just assuming it's um, I'm just assuming it's straight line. Ah, there's it there at the bottom. Okay, there, trucks. All right, if it's straight line, then it's fine. If it wasn't straight line, then I would have to adjust my working.
mm,
Do you see that?
yes.
Okay. All right, so yeah, these are all the different assets, the accounting policies. So obviously the manufacturing plant was reval. This is cost model, and this is straight line over the useful life. Okay, that makes sense. That helps us a lot. Okay, so if I'm looking at depreciation, I'm looking at depreciation for the year.
An
Do you agree?
impairment? Oh yeah.
Okay, so what is the depreciation going to be for the year?
Um, is it just going to be like? Are you just going to put the what is it? The 9 million something minus the 800 for 1 year over 5 years?
Well, you're working out depreciation for 1 year, so have you used the asset for the whole year?
Mm, I think so.
Yes, there's no pro rata here. The trucks you had at the beginning of the year are the same trucks you had at the end of the year, right?
Yes.
Okay, so what was the cost? 8 million times, ooh, hold on. We can't forget the residual,
Mm,
times 1 over 5, 1 full year. Does that make sense?
yes.
Okay, there's the depreciation for the year. Does that make sense?
Mm.
Okay, so we're going to insert that here because that's the depreciation. All
Yes.
right. The only thing we haven't looked at yet is the impairment. Okay, because the impairment is something that we need to provide for because they told you here, there, that it was decreased in value or significant drop in
Mm.
value. So now we need to go back and look
Yes.
at the context. Where was that value thing? Here's the value thing. Okay,
Mm.
the fair value of the original fleet of trucks was determined. Okay, this was by the valuer. So what is the valuer
Yes.
going to compare that to? When you do an
New
impairment,
trucks.
what do you compare the impairment value to?
The new merchandise.
No. Think about it. It's impaired. So what does that mean? The market value or the fair value is lower than what?
The original value.
No, not the original value. The asset isn't at original value. What is the asset worth here?
3 million.
No. What is the asset worth? This is the fair value. What is
Oh,
the asset worth here?
the carrying value.
Yes. Okay, so remember, every single asset has a book value or a carrying value, right?
Mm.
Okay, book value or carrying value is what you have it at in your records at that point in time. Does that make sense?
Yes.
Okay, so you are going to compare what the carrying value is to the future value. Not future value, fair value, right?
Mm.
Okay, we just need to go check the impairment part. The impairment does take, there's certain rules regarding an impairment. We need to go revise that. Where's the PPE here? PPE here, 287. Okay, so this is theory that you'll need to know. And we're looking specifically at impairment and what the rules are regarding the impairment of assets because you need to, the impairment of assets 10.7. Depreciation. Okay, here's impairments. I think I went too far. 10.7, where are you? Here, okay, I see recoverable amounts. Oh, I see impairment of assets. There we go. Right, so see, this is revision. This is theory that you would have covered during your studies. Okay, so what is an impairment? Well, an impairment is basically a decrease in value based on the asset's market value or fair value in relation to its carrying value. So when the carrying value of an asset exceeds its recoverable amount. Okay, recoverable amount means what? This is theory. What does
The
that mean?
amount you can sell it for. Is,
No,
is,
not
is that
quite. It's
you
basically
can
what you can
rec-
get back in terms of its
mm,
use or sale. So not only sale, use or sale.
okay.
Okay, recoverable basically just means, well, I've got an asset, now what can I get for it? Okay, what can I get from it? I can get use from it or I can get rid of it and sell it. And I can get
Mm,
proceeds from the sale. Does that make sense?
yes.
Okay, so that's what they've defined it as. You do need to go and look at the recoverable value. Let's find that. Okay, there. The recoverable amount is defined in the IAS 36 standard as the higher of an asset's fair value less cost of disposal and its value in use. Do you see that?
Mm,
Okay, so you need to copy paste that and you need to write that down in your answer. Where's my snipping tool?
mm.
Okay, because this is IAS 36.
6.
Where's my workings? Paste. Okay, this is applicable. Okay, obviously you would have studied that. You would have known that off by heart. Okay, so that's what you're
Mm.
going to be doing. Right, so now you need a working. All right, so working. Fair value less cost of disposal. Not disposal. Oh, it is cost of disposal.
Yes.
Okay, so what were those costs of disposal? 450.
Yes.
Do you see that?
Yes.
Okay, so the fair value was, what is the fair value? 3.1,
3.1.
wasn't it?
Yes.
Okay, 3.1. Okay, the cost we saw is 450, hey?
Mm.
What is 3.1 minus 450? Let's see. 265. Makes sense.
Mm.
Okay, and what's the other thing we need to work out? Value in use.
Yes.
All right, how do we work out value in use? What did they give us here? They gave us information. They have to. Okay, here they only gave you cash flows. All right, let's just go back to the textbook. Value in use, I think, is the present value. Yeah, it is. There we go. Okay, value in use is defined by IAS 36 as the present value of the future cash flows. Do you see that?
Mm. Yes.
Oops, wrong page there. Okay. Did you find that calculator?
Oh, yeah. Wait, give me a second. Give me a second.
Do you have it? Problem. Yeah, you're gonna need that calculator for Thursday. Hey, so if you don't find it before Thursday, you're gonna struggle. You're not gonna be able to do any time value of money. So
Mm.
you need it. It's a tool. You have to have it, eh? Yeah.
Yeah,
So
no, I bought two because it's not the first time that they've just lost it.
yeah. Okay, but yeah, just try find it again. It doesn't matter. I'm just showing it here. You don't have to do it now. You can do it later, but you need to know how to do it. Okay, so I've got my calculator. Let me just clear the memory and everything. Okay, so on the
Okay, we
Casio.
found them. Both of them were in my brother's room, which
Okay, so your Okay, so you do the working. Grab your calculator, do the working. You're using cash flow.
okay, cash flow. Okay. Um Give me a second, give me a second. Profit rate 2.5.
You're working out the
And
present value
then
based on those cash flows. If you exit and go to the cash flow editor and you solve for NPV, okay, I've got an answer. What do you get?
um wait, give me a second. It's been a while since I've used this. Cash flow. We edit, right? How do I get out of this thing? How do I work this contraption?
Okay, so you need a second function, shift clear, which is on button 9. Then you press cash.
Second function, shift clear.
Do you know how to clear the calculator? It's the shift button on the top left, and then button number 9 is second function clear.
I got something 2 million. So 2 million point something. I don't know if that's correct, but shift clear.
And then you press cash.
Okay, so
Cash opens up the menu. You insert the rate, I is 10.5%. Then you go into the cash editor, the D editor X.
yes.
And then you insert the values 0, 1, 4,
Yeah.
1, 9, 7, 9, 2, and 1.85 million.
Yeah.
And then you exit, escape, next to solve, and then you scroll down, NPV solve.
Yeah.
What do you get?
2.8 million.
Yes, 2.8 million and
Oh, okay. I did it
1.31.
right. Okay. Yo, at least I'm not completely dense. Yo,
That's
I
what you
got it
get,
the first
right?
time. I was confused.
Okay, so what is the higher of the two? Which one is higher? This or that?
That?
The 2.8. Yeah, the 2.8 is higher, right?
Yes.
Okay, so 2.8 is representing what?
The amount in use.
Amount
Was it
in use. Yes, well, it's representing the
the
higher
value
of
of
the
use?
recoverable amount.
Yes. And the cost of disposal would include like advertisement or something that was used, right?
Well, yeah, it just depends on what they say in the question, but it must be applicable to the disposal of the asset. It can't be unrelated. It must be related. If it's
Yes.
marketing and advertising, possibly, but it must be related to the sale.
Yes.
Okay, value in use, we worked that out. Recoverable amount is defined as the higher of. So we've got the recoverable amount. Does that make sense? Okay, now we need to do the impairment. Where's that note about the impairment? There. Carrying value less recoverable amount. Do we have the carrying value at the end of the year?
Yes.
No, we can work it out.
No. We have to work it out.
What's the cost? 8 million less.
8
What's the
million.
accumulated depreciation? 2.88
Ah,
million
20,
plus the
yes.
1.44. We just worked that out. There's the 2.8.
Yes.
There's the 1.44. Make sense?
Mm.
Minus, what is it? 282880000. Is that right? Yeah. Minus
Yes.
1440123 equals. Okay, there's the
Carrying
carrying
value.
value at the end of the year. Does it make sense?
Yes.
Okay, so now we're looking at carrying value less recoverable amount. Okay, so the carrying value less the recoverable amount. What is the recoverable amount? We just worked it out. Where is
2.8.
it? 2.8, right?
Mm.
Okay, so the impairment is CV minus recoverable amount. What is the CV? 3.68 million. Less, what was the recoverable
2.8.
amount? 2.8. Okay, so this figure minus, where's the other figure? This one, 2.8. Oh, but it's going to give me cents. Okay, let me just type it in rather. 2800123. Okay, gives me 880,000. All right. Hold on, there's something wrong here. It can't be so big. Why is the impairment that big? Yeah, that's a huge impairment. There might be something wrong here. Let's go back and see here. Impairment loss, carrying amount minus recoverable amount. Yeah, recoverable amount
It
is the
says in the
higher
memo
of
the
the assets fair.
impairment is 80,000.
Huh? Say that again.
In the memo, it says it's 80,000.
Is the memo 80,000? Okay, we'll look at that and see how they worked it out. But I'm just checking my working here. Okay, so recoverable amount is the higher of the asset's fair value less the cost of disposal and the value in use. Okay, do we have that? Fair value minus, that's 2.65, yes. And we did work out the value in use, yes. What's the higher of the two? Definitely that one. Okay, so we've got that. Right, so that is the recoverable amount. Yeah, that's the recoverable amount, so that's fine. Recoverable amount, 2.8, that's fine. Okay, then we need to work out the carrying amount. Okay, the carrying value. Right, what is the carrying value? The carrying value would have been the cost less the accumulated at the end of the year. Yeah, that's correct. There's nothing wrong with that. And that gave us that figure. Okay, and then we just need to get the impairment. Let's go find that working just to make sure we've got that right. Okay, here. Carrying amount less recoverable equals impairment loss. Yeah, we've done it correctly. Was there anything else here that we might have missed? Let's just check. No, that's it. And then they've just given an example. Yeah, there's the recoverable amount, the higher of the two, which is that one. Carrying amount minus that gives you the impairment. Yeah, there's nothing wrong with the working. It's correct. I did use the carrying value, yes, and I did use the recoverable amount, yes. Yeah. Okay, so I'm going with that figure. I'm just going to put that in my table. Okay, I haven't provided for it. I'm just going to write it on here. That's the 880.
So it says the value in use would be the 2 million plus the residual value.
Okay, let's go check. Where's that file? Let me see. This was solution 1, eh? Okay, where's it? Here.
So carrying amount plus
Carrying value. Carrying value is fine.
yeah. So our value
This
in
is
use
fine. This
should
is
include
fine. This is fine.
yeah.
This is fine. Okay, yeah, the impairment loss is a problem.
Yeah, so it says it should include our value in use, our residual value.
Workings. Okay, let's see. Cost, residual, depreciable amounts. Okay, there's the accumulator. That's fine. Okay, there. Carrying amounts. Carrying amounts.
That's fine.
Okay, that's fine. Depreciation is fine. Okay, there they've got the same figure. There's the 3.8. There's the 368. There, do you see it?
Yes.
Okay. The fair value less cost to sell. That's the same figure. Where's that 2.8? There's the 2.65. That's fine. Value in use is 3.6. Where's my value in use? Oh, okay. Why are they adding the residual value? Interesting. Okay, we need to go check value in use. Let's go check value in use. Value in use. Where's value in use? We need to check value in use. There. Okay, value in use. Value in use is defined by AAS as the present value of estimated cash flows expected from the continuing use of the asset and from its disposal at the end of its useful life. Did not get that. Okay, do you see that? Okay, so what can I sell the
So
asset
we
for at the
include
end
the
of its useful
residual
life?
value.
The residual, yeah. Do you agree? Okay, yeah. So the answer is correct. The memo is correct. We just needed to provide for this bit. This bit was important here. Let me put a little circle around it. Okay, yeah. See, that's why the statements are important, because you also need to include the residual, yeah. Okay, so now we know. Okay, so when we do this again, we'll apply the IAS correct. Also include the residual value. Okay, so then I need to add that gives me the 3.6, right? Yeah, okay, I see what they've done. Yeah, and then obviously the recoverable amount will be the higher of the two, which is therefore 3.6. Does that make sense?
Yes.
Okay, yeah. So this figure we obviously need to correct, and that figure is based on this calculation. Make sense?
Yes.
Yeah, there we go. 80,000 is fine. Okay, yeah. So yeah, definitely something to just look out for. So just remember, value in use, according to IAS 36, is the present value and the proceeds from the disposal at the end of its useful life, which is the residual. Yeah, and then once that's right, then you've got that. Okay, then just to wrap up, the cost is obviously the cost. That stays the same. Okay, the accumulated depreciation would have taken everything into consideration. So they should have shown that. Yeah, here they did. Okay, there's the total. Do you see that?
Yes.
Okay, so we're adding this plus that plus that. We're adding all of it. So this plus that plus that. Okay, and then carrying value is the difference. Make sense?
Yes.
Okay. All right, so yeah, so see, that wasn't such a bad question. As long as you approach it correctly, diagrams, 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 pictures, pictures, pictures,
Yes.
then you can see what's happening and then you know where you are. Okay, just be careful with the impairment. That was the distinction part of the question. Okay, you just needed to apply the IAS correct. IAS 36, right? Is it 36? Yeah, it is
Yes.
36.
It is 36.
Okay. Makes sense? Okay. Let's change the question. All right, what's the next question dealing with?
I think it was. Wait, hold on. I have this with me. Prepare the suppliers reconciliation.
Oh, okay. Creditors Recon. Okay.
Here's the question: if you don't like accounting, why did you study it?
No, it's not that I don't like accounting. It's just I don't like. I like accounting in terms of what I can do with it. So like I like looking at the financial statements and interpreting it to make a decision. But to create the statements, I'm not a fan of that. Like I would rather let the CAs do what they want to do. They make the financial statements, and then I'll just look at the stuff that they're doing, and I'll use that information to make decisions. Yeah. So remember, we spoke about this when we started this this week, or we started this 10 days. Financial accounting is just a language of communicating information. So I don't like creating the information. I like the information. I like using the information. But yeah, I'm not a fan of creating this. Like I don't want to create this information. But I would take this information and I would use information. So I would look at this and say, okay, fine. Trucks are worth 3.6 million. What other assets do they have on the balance sheet? And I'd be looking at the financial statements to decide on whether the company's undervalued, overvalued, or fair valued in order to make a decision on when or whether that company is doing well or not. So yeah, so I don't like, when I say I don't like accounting, I know its benefits and it's a very valuable skill, and I do appreciate what accountants do, but I just don't like doing all of this. I'd rather let them do that and I'll just use that information. So it just depends on perspective. So yeah, I always liked tax, I always liked management, finance, the management accounting and finance. I didn't like auditing and I didn't like accounting. I mean, I did it and I've passed all of it, and it was fine, and I appreciated what skills it taught you. But yeah, never wanted to be an auditor. Was an accountant, but didn't like being an accountant because, as I said, it's very much record keeping, presenting transactions, processing journals, entries, etc., etc. Not very exciting stuff. Yeah. Okay, so don't get me wrong. It's a very important skill, and it's a skill that everyone should have. You should be able to read and interpret information. But yeah, I just don't like this part of it, generating the information. I can do it, but I don't like it. So I focus on my strengths. I focus on things that I enjoy doing. Yeah, so that's the answer to that question. Okay. All right. So yeah. So supplies reconciliations. Let's go look at that information. Okay. So let's ask you, what do you know what a supplier recon is? Creditors Recon.
Just check if you and the creator's books are the same.
Exactly. All right. So literally, you're just looking at. Think of a bank recon. I'm sure you've done a bank recon before, right? Okay, a bank recon is basically checking what you have and what the bank has, right? To make sure that everybody's on the same page.
Yes.
Okay, so if I'm looking at a creditors recon, I'm doing the same thing. My supplier and I are going to have a view on our accounting balance. Okay, I'll have a balance in my record based on what I have processed, and they'll have a balance in their record based on what they've processed. Okay, so what did they say here? Prepare the recon. Okay, so the recon is in a specific format. Okay, the format can differ depending on how you present the information. It's normally based on a line by line basis, and that would have come out of your textbook. So that would have come out of the accounts payable or trade payable section that I did see in this textbook. It is a separate chapter there, page 409. Okay, so in page 409, accounts payable, we look at the creditors recon. We just need the template. Okay, here they talk about the procedure. You're just checking stuff basically. It's very similar to bank recon. Okay, this looks like workings. Okay, this looks like the right thing. Yeah, there's the reconciled balances. Okay, yeah. So the reporting entity and the creditor, the supplier. So their books, your books. Okay, I assume that they wanted you to do it the same way here. Let's just check the answer. Did they? Yes. Okay, there you go. 1, 2. So you've got SA Hops and you've got Sina Mandla. Okay, so, and then you've got the reconciled balance. Yeah, it's the same format. So just use what they give you in the textbook. Okay, they want you to use this format, so make sure you use that format. All right, so document, description, reporting, entity, and then so entity, so in other words, our business, and then the creditor, which is the supplier, which is the third party. Okay.
Do you think I should prep the outline or like the skeleton of a answer before I go into the exam?
When you say prep, you can't prep, you need to study it.
Yeah, no, obviously. I'm just saying, for one of the things, like before we answer a question, we need to say our student number, the date, have our student card and everything there. Like there's a lot of information we have to include at the top. So I should probably go prep those pages.
Oh yeah, of course. Yeah. So you can do that at the beginning or at the end. It doesn't matter. Or I don't know if they allow you to write during the reading time. Probably not. But if you are allowed to write, then use the reading time. At the top of every page, write all your details. When you get the required, you need to draw up your templates. And remember, use lots of space. Don't be afraid to ask for more paper. Let me just draw something here. So if you have a question like this, this is the book.
Okay.
And that's the one page, and that's the other page. The one page I'll have my answer, and the other page I'll have my workings.
I don't think so.
Are you still there? What's
Sorry.
happening? There's
Yes,
lots of background noise.
sorry. Remember I said construction workers still.
Oh, they're there again.
Yeah, still doing that. Yeah, no, they're not going to be making noise, but
Okay.
they were just asking if I had stuff to do. I don't know.
Okay, so there's answer, and there's the workings, and that's one page. That's another page. So remember, layout is important. Try lay out your answer in your answer booklet as easy and neat as possible, so that they can mark it easily and they can give you marks. Yeah, so this would be workings. Well, workings can be done on a separate page, but your answer needs to be done properly.
Yes.
Okay, so yeah, so if you need to write down all your student numbers and all the other details and all the other stuff, so yeah, do that during the reading time or do that at the end. It doesn't matter, but make sure you just meet all the requirements in terms of their what do you call it, their rules. Okay, all right, so let's see what we have here. Okay, this is transactions with SA Hops. So obviously Hops is the supplier. And S Limited is the business. Okay, so what do we have here? SA Hops is the largest supplier. S purchases hops used for brewing. as part of the month-end process, the supplier statement is reconciled. Okay, that's obviously important. On inspection, the statement as at. Okay, that's important. So the dates. Dates are always important. You need to make sure what you're dealing with and what you're disclosing information in terms of the year end. Okay, it was noted that there was a debit balance of. Okay, where is that? On inspection of the SA HOP supplier statement. Okay, that's the supplier statement.
For us, it's a credit balance.
Huh?
For us, it's a credit balance.
No. Remember, their statement is opposite to your statement. So in their books, it will be a debit. In your books, it will be a credit.
That's what I just said, though.
No, but not. You don't show that in your books, though. This is not your books. This is their books. So there is no debit and credit here. You're not accounting for a debit and credit. You're accounting for the balance.
Okay.
Okay, so remember, it's the complete opposite. Same with the bank recon. Okay, a debit in your books will be a credit in theirs. So on a bank, okay, let's just get this concept right. On the bank statement, what do you want to see on your bank statement? Debits or credits?
Debit.
Really? So you like debit orders? You
Oh,
want to see more of them?
oh, sorry, on the credit on the on the
Okay.
bank statement.
All right. If it's on your bank statement, you don't want to see more debits. You want to see more credits. Because it's the opposite. You're looking at the bank's records. So the bank would be showing us a debit or a credit, depending on perspective. So remember, our creditor is going to view us as what?
A liability.
Their debtor.
No, a debtor as a debtor.
Remember, it's perspective, right?
Mm-hmm.
Okay, it's important that you understand that, because when doing any recon, you can do a debtor's recon, a creditor's recon, a bank recon. It doesn't matter what recon. The principle is. I like principles because it doesn't change. If you understand a bank recon, you can understand a creditor's recon. You can understand a debtor's recon. It's the same thing, just different context.
Mm-hmm.
Okay, so what do you have in those situations? You have internal versus external. All right, so in this case, that's internal, that's external. What's on this side is separate from what's on that side. Does that make sense?
Yes.
Okay. All right, then what do they say here? The subsidiary ledger had a credit balance. Now we can talk about the credit side, credit balance, because that's our records. Okay, you need to interpret this correctly. Subsidiary ledgers, internal records, your books. Does that make sense?
Yes.
Okay, so what do we have in our books?
395.
395, 970. Makes sense?
Yes.
Okay, so now we've got that. Okay, supplier statement. I would have actually have done it this way, just to show everything.
Yeah.
Subsidiary ledger. Okay, you could probably show that on one line and just make it one description. Again, just go look at your format, make sure it's in the right format. I'm just doing it this way, just so that everything is on the actual working. You can see everything and you know what it refers to. Okay, so I'm just going to leave it like that on separate lines. It could be on one line, doesn't matter, as long as it's the balance. That's obviously the balance. Okay, at 30 September. Does that make sense?
Mm-hmm.
Okay, so this could have been one line. Let's just put a block around it. Okay. All right, now we're looking at differences. Okay, so remember this whole internal, external, bank recon, their books, your books. Same thing here, their books, your books. All right, let's read the question. The following information relates to transactions to SA HOPS during September. Okay, fine. First bullet. EFT of 23 was made by S, okay, to the supplier on the 29th of September. The transaction takes 3 days to clear. Right. Have you recorded it? Yes or no?
Yes.
Have they recorded it?
No.
No. So this is this would be an outstanding payment not provided for by the supplier. Make sense?
Mm.
Okay, so they still need to do it. So is your account balance too high or too low?
Too high.
It's too high. It should be
No, too
lower,
low.
right?
Oh yeah.
So you need to show a negative. What is it? 23. Okay, so when they process that payment, they will decrease your balance. Make sense? Are you with me?
Yes.
Okay. 15 September, S placed an order at an invoice price of 65. This was 15 September. That was during the month. At 30 September, the hops had not yet been delivered to S. The accountant of S recorded the order in the subsidiary ledger on the date that the order was placed. So, does your subsidiary ledger have it?
Yes.
Yes. The transaction is not reflected on the supplier statement. Do they have it?
No.
No. Okay, so okay, what didn't they process? They didn't process the 65. That was the invoice price. Does it make sense?
Mm-hmm.
Okay, just another note here. Remember we spoke about VAT? Does VAT affect this? No. Why?
No.
Why not?
Because both. It's just payments between you and the
No, not
supplier. You
payments.
don't. Not payment.
Amounts
Transactions.
outstanding, owing.
Mm.
Liabilities, are liabilities shown at the inclusive or exclusive amount?
Inclusive.
Yes, because you owe them the total amount. Does it make sense?
Yes.
Yeah, so you don't have to worry about taking out VAT. But if you didn't have VAT here, you'd have to include it actually. Does it make sense?
Yes.
Okay. All right, what else do you have? This invoice for 245 received from S was subject to a discount of 5%. S's, so our business, our accountant did not take this into account. So, whose books are right?
There's
Whose books are wrong?
ours.
So we need to fix it. Does that make sense?
Mm-hmm.
Will our books be too high or too high or too low?
Too high.
Too high. So we need to take out. We need to minus. What is the discount going to be? 5% of 245. Does that make sense?
Mm.
Okay, gives us that figure. Happy with that?
Mm-hmm.
Okay. SA hops included sales of 2.5 made to DHB on their statement. Who made the mistake?
Us.
No. This is not our
No,
mistake.
them.
Whose mistake is it? It's
Them
their
is the
mistake.
mistake.
What happened? Explain what happened here.
They included someone else's sale to us.
Exactly.
Not like
Not someone's sale, someone's purchase, because we're purchasing, they're
purchase.
selling. It's from our perspective. So someone else's purchase is appearing on our account. Are you happy with that?
Yes.
Really? You happy with that? So you want to see other
No,
people's...
okay. No, we're not happy with that. We need to tell them they made a mistake.
Yes. Okay, so error on the supplier's invoicing. Incorrect billing. Okay, so is the amount too high, too low?
Too high.
Yes, so you need to take out 250. 2,500, not 250. Okay, 2,500. Right, and then the next bullet. SA Hops grants a settlement discount of 2.5% if payment is made within 30 days of delivery. Okay, so this is the supplier. Supplier gives us a discount if we pay early. H, or hops were delivered to S on the 15th of August. 15th of August is last month. Okay? On the 30th of September, the amount related to this delivery was still outstanding. Okay, so you haven't received it. Do you agree?
Yes.
The delivery is outstanding. So you ordered goods? No, hold on. Let's read that again.
No, our amount paying to them was
The
outstanding.
hops was delivered. Okay, on the 30th of September, the amount related to this delivery was still outstanding. Okay, so the amount, in other words, the balance was still outstanding. So you didn't pay early, looks like it, hey? The accountant was confident that S would pay within 30 days. Okay, so your accountant says you are going to pay within 30 days and accounted for the trade payables net of the settlement discount at on the date that hops were delivered. Oh, okay, I get it. All right, so, all right, let me rather ask you, do you get it? Tell me what's happening
Yes.
here.
So what happened was they offer a discount if you settle within a month. Our accountant thought we would pay within a month. So they included the discount. Well, they took away, like, do you get what I'm saying? So the amount is with the discount. Like
Yeah, but did
not
you actually
including.
pay?
No,
No. So is the discount applicable?
no,
No. So who needs to change their books?
us.
Yes. Okay, so I would be adding back. Okay, you can't take out discounts if you haven't even paid. That would be bad. Okay, it's like providing for a future discount and it hasn't even happened. That's not good. Okay, so do you agree this amount net of the settlement discount? That's the net of. So what's the actual amount? How do we calculate the actual amount? Okay, the net amount.
5655. Oh,
So what's the total?
times.
What's the gross amount? How do you get the gross amount? Do you know?
Yes. Let me take this. Divided by 97.5%.
Yeah, times 100 divided by 97.5 because you've got the 2.5%. Yeah, so you want the gross amount, so you're grossing it up. Make sense?
Yes.
Okay, 58. Okay, so what's the discount amount?
Yes, that's 500 divided by.
No, what's the discount amount? Just the difference, right?
Yes.
That right? Which is the
Yes.
2.5%. Same thing.
Yes.
58. Happy with that?
Yes.
So is your amount too high, too low?
Our amount's too low.
So add it back.
Yes.
Okay, and if you've done this correctly, hopefully we have, if you just sum up all the columns, full marks. Okay, all right. Is that in line with the memo? It might look a little bit different, but yeah,
Yes.
pretty much the same. They didn't show much workings here. Okay, they show workings as part of the question. That's fine. Yeah, but that's all it is. It's literally that simple. You should be hoping and wishing for this to come up because this is easy. It's like a bank recon.
Yes.
Okay, do you study for a bank recon? No, you practice because a
No.
bank recon is a process and you just need to think about it. So thinking is key, application is key. Like I didn't study the section, I just thought about it. Whose books are correct? Third party, your books, their books, that's it. And then you just got to think. Okay, these are
Yes.
nice questions. You should be hoping for more of them.
Praying.
They're easy marks.
Yes.
Okay. Are you happy?
Yes. 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 I mean, why wouldn't I be? You got it correct. So.
No, I'm saying, are you happy with the approach? Are you happy
Yeah.
with the
No.
workings? Are you happy with
Yes.
the exam technique?
Yes.
Okay,
Yes.
good. Yeah, it's more about the approach. The biggest obstacle in terms of passing is bad exam technique. All right, if you've got good exam technique, you will do well because you're structuring your answer and you're approaching it correctly. All right, and you
Even if it's wrong, you have the calculations to back up why your answer is what it is.
exactly, and they should give marks for that as well. Okay. Let's do it this way. Question 1, part B. Okay, you wanted to do ratios. I think we'll actually manage with ratios. We're doing well with time, actually. We've got about half an hour, plus minus. Part B, Okay. What's your view on ratios?
Like them.
Good. Okay. Why?
Because they're easy. Well, it's
Besides
not
that,
necessarily easy because you just copy and paste the formula.
yes. Okay, but you're not going to be able to copy paste because remember it's a closed book exam, right?
When I mean copy paste, is my vocabulary for you just take the amount and you just paste it into the formula that you know.
Okay, yeah. So in terms of workings, yes. So solvency ratios, again, you need to go to your textbook and you need to look for the ratios. This would come under analysis. So 552. There should be like a formula sheet somewhere here, or if they don't give you a formula sheet, they'll give it to you one by one by one by one. But yeah, use the textbook formula, the one that you've been given. So there, ratio analysis. Okay, short-term liquidity. We're looking for solvency. Solvency would be like the total debt ratio, those type of things. This is analysis. See, this is actually more financial management than accounting because you're taking what the accountant drew up. So you take the financial statements and then you are applying your knowledge. This is financial analysis. This is looking more at financial management. So you asked me about the difference between accounting and finance. Yeah, so this is more so this is stuff that I don't mind doing. This I like doing because this gives you more detailed analysis of those statements rather than just showing the statements. Because here you can determine liquidity, you can determine solvency, you can determine profitability, you can look at market ratios. Right. See, this is powerful because this is using information. Right. We don't need to go create the information. Someone else can do that for us. But once we've got the statements, now we can do the analysis and we can make decisions. So this is the stuff that I like. I like this more than the drawing up statements and things like that. I don't mind it, but yeah, not a fan. Debt ratios, equity ratios. This is solvency, but do they give you a nice heading for it? Yeah, I think so. I think I passed it. Yes, yeah, there we go. Okay. All right, there's the word solvency. Do you see that? Okay, so what are they asking you for in this question? 5 marks. Remember, the question is your guide. Discuss means talk about. So you are going to be discussing. In other words, you're going to be describing the purpose of each of these ratios. Obviously, they want all of them, okay? And they're asking you to make a decision whether the company should fund the expansion or not using debt or equity. Okay, so what must you do? Go to the textbook.
Yes.
Okay. Copy paste that. Make sense?
Yes.
Okay, let's do that because we can. Okay, so those are the first 3 I need to calculate. What else do I need to calculate? Keep going. Do you see more? Yes, here's another one. Okay, so you literally do all the workings. If they say solvency, write them all down, do them. If they allow you to write during your reading time, you might even want to just jot down key ratios from memory during the reading time, so you have your own formula sheet. So inverted commas. Okay. Again, depending on your memory, some of these are quite easy to remember, some of them are more tricky. I don't know what your approach is going to be, but I've seen this and sometimes it does work. Okay, I'm just sharing with you some information that I've seen from other students. So some students, what they do when they get the reading time and they say, okay, reading time, go read, and they don't give you the required, but they allow you to write and you can highlight and you can do whatever you want on the question paper. What I've seen some students do is they frantically write down from memory all the formulas that they think they're going to be needing in the actual reading time, because then you're basically making
your own formula
a
sheet.
closed book exam open book. Okay, inverted commas. It's not open book, but it's kind of open book because You're just writing it down from memory so you have it. So you don't have to, because remember, your mind is going to have such a lot of other things to remember. So let's relieve our minds of something that they need to remember and just jot it down, write it down. So once we've written it down on the question paper, now we can forget about it because we've got it. Does it make sense?
Yes.
Yeah. Okay. So again, depending on you, you decide how you want to do it. That's it. Operational efficiency and profitability, those are other ratios. Right. So those are the ones that you need. Make sense? Okay. Now, where are we? Where's the ratio stuff? Oh, this is part A. Next question,
yes.
part B, right?
Yes.
Ah, there we go. Okay. Oh, notice they even gave it to you. Look. Okay.
Sheesh.
All right, that's good. No calculations here. Okay, this was a different type of question. It looks like, okay, I haven't read through all of this, but obviously you would have during the reading time. If I'm looking at this, see, these are my initial thoughts. During the half an hour reading time, I'm looking at part B and I'm thinking, okay, ratio question, I can see ratios. I can see they've given me calculated ratios and I can see they've given me the year end. Okay, so that helps me a little bit. What else do I see here? I see they've given me investment information, okay, relating to two. It looks like it's two different businesses. Yeah, it looks like it. You've got F and you've got D. Okay. The following has been extracted. It looks like they're doing due diligence. So due diligence appears. Okay, so you do due diligence when you're looking at like takeover or purchasing or investing and stuff like that. So due diligence just talks about doing your homework. So before you invest, before you do anything, make sure you know what you're getting yourself into. So if you're looking at Denville Hill, okay, obviously you're comparing them to us, right? And you're doing your due diligence, right? So you can see that Denville looks like a smaller company. Current assets are less, current liabilities are less, sales are less, cost of sales are less. They look like a smaller company. And then you've got ratios here. No other analysis ratios have been calculated by ZAD. Okay, is that it? Yeah, that's it. Okay. All right. So they've given you ratios. They've given you information here. This information you can use to do calculations. All right. Here they haven't. So you have some information. You don't have enough information. All right. So let's look at this. Debt ratio was given. Debt to equity was given. Equity was given. Interest cover was given. Ooh, I didn't copy the heading here. I should have. Interest cover. Do you see that? Okay. Just going to write it down.
So interest cover does it just mean like your ability to pay back your interest or?
Yeah. So interest cover refers to your ability to pay the interest expense. In other words, the financing costs through operations. Because remember, you're generating profit before tax and interest. That needs to provide for the financing because you've loaned money. All right, so it's basically, can your operations cover your financing costs? Okay, does that make sense?
Yes.
All right, this looks like a theory question. Yeah, it says discuss, so no calculations needed. All right, so talk to me. Tell me what the debt ratio is. What does the debt ratio do? How would you discuss
the debt
this? Tell me.
How much of your company is funded by debt?
Yes. So do you want that to be more or less?
Less.
Ooh. If you say less, explain.
You don't. It really depends on the company because sometimes it's good to be able to spend someone else's money.
Exactly.
When you're taking out an asset or something like that, where it's beneficial for you to not pay the full amount and to use the asset to pay back the asset. Whereas other times with equity, it's better to have some equity on hand for like expansions and stuff, just so that you know that you're able to pay back the debt in case something happens.
Yeah, that's perfect.
So I would say
yeah, that's good. Everything you've mentioned is valid and correct. Just remember to answer the question. So I would definitely talk about what you're referring to. I'm just going to give what you're talking about a name. What you're referring to is leverage, and leverage is basically your risk appetite in terms of debt versus equity. Right, so then remember, how do we approach theory questions? You go to the question and you look for things that can help you. Okay, that will come out of the scenario. So go back to that long context template, not template, question, and then find something that you can then use to apply that to this question. Because they're asking you to answer this question. Should they
Not just
fund
given
expansion
overall.
using debt or equity? So their debt is higher than their equity. Do you see that?
Yes.
So do they have leverage? Yes, there is existing leverage here. In other words, they are using external finance. So now the big question mark is, do you think they should use more or do you think they should use less? What do you think?
I think they should use less because their debt is already really high and the equity is like very low. So if they take it's like 50-50. Like if they take out more debt, then it gets harder to cover in case something happens. And if they take it from equity, then it means that equity gets lower.
Yeah, that's fine, but you're just telling me the balance between debt and equity. You're not
I
motivating
feel like
it with the
they I feel
scenario.
like they should
Tell me about the scenario.
I feel like they should fund more in equity for the expansion.
Why? Use something from the context. Tell me about the business.
Because they already are using a lot of debt. So just to kind of balance it out a little bit, maybe use more equity to fund more things. And they already have a potential investor for equity funding,
Ah, there we
whereas
go. See, now you're using context.
mm, but yeah, that's practically what I have to say. They use a lot of debt. They should use more equity, and it isn't an issue because they have someone who's willing to fund them for equity.
Yeah. Okay,
So it
that's fine.
wouldn't.
But again, you need to use context. So why are you saying use more equity than debt? You're telling me that the risk of using debt is a concern because you might end up paying more interest. Then you should talk about this COVID-19 restrictions.
Interest.
Okay, if I can't operate, am I going to be able to pay off interest?
No.
No, because if there's no sales, there's no income. If there's no income, there's no paying off interest. But if I have equity financing, if I take money from an investor and I don't operate and I make zero profit, do I have to pay anything to the investor?
No.
No, you don't have to pay anything. So that's the reason. See, you're motivating why, you're discussing why you should maybe consider funding, and you're using context. Okay, you have to use this question. So I would be talking about that. I would be saying there's a risk of taking out more debt. You already have lots of debt. Everything you said there was perfect, but just relate it to the question. Say, if I take out too much debt, it's going to affect my interest coverage. The interest coverage ratio will decrease if I take out more debt because I need to finance more interest. Financing more interest is risky because if I have a lockdown and I cannot operate, the banks don't care. The banks are still going to want the interest. Okay, because you've entered into an agreement, all right? If you can't operate because of the rules, because of the restrictions, whatever the case might be, it's going to affect your ability to finance your operations, right? And you can maybe discuss something like that. I'm just thinking outside the box. I'm just telling you to use the information in the question as best as you can. All right, are you happy with that question?
Yes.
Let's see what they've got. See, they're talking about gearing. Okay, gearing and leverage. Gearing is the other way of describing leverage. Different textbooks talk about different things. I don't really mind which one you use, but yeah, I used leverage. I see they've used gearing. Okay, gearing also talks about leverage. Gearing talks about how leveraged you are, basically. So they spoke about the same thing you mentioned, 65-35, high gearing. See, high gearing, there's the risk part, see? I do think they want you to bring that in. You need to talk about it. The interest coverage I mentioned, but here they're talking about the ability to finance, to generate profit. See, generating profits. Additional debt will result in a risk that the operating profit would not be sufficient to cover the debt. See, it's all what we spoke about. You even mentioned it yourself. You told me that the debt is very high Equity is lower risk. It doesn't come at a high cost. You mentioned that it's easier to get the investment. Looking at their memo doesn't even talk too much to the actual scenario. I would have wanted to bring in more of the scenario, but the answer is fine. They're probably going to be looking for something similar in your answer, in your question, in your answer for the question. Does it make sense?
Yes.
Okay, so I don't think this will ever be an issue. You just need to think outside the box and bring in information from the question. Okay, do you think you'll get 5 out of 5?
Yeah, maybe 4.
I think you could get 5. Your answer was good. You just need to bring in more of the question, that's all. And bring in more of the risk part, the risk, the leverage, the gearing, all of that stuff. And that would have come from the textbook in terms of content relating to solvency. Right, so see, that's the type of revision that I would encourage you to do. Because remember, when you go into your exam, you're not going to have any of this, okay? Do you know what each of these sections deal with? So for example, let's find where this starts. Let's see. What's the first topic, first section? Here's the first section. Number 1. Number 1 is talking about short-term liquidity. Do you know what that is?
What is it? It's current assets, current liabilities.
No. What does liquidity refer to? Talk about the concept. Tell me what liquidity means.
If the business had to sell, how liquid would it be?
No. No, you're not referring to liquidity. You're referring to insolvency if the business had to sell everything. Be more specific. What is short-term liquidity? Short-term.
I have like an idea. I just can't put it into words.
Okay, so what is the idea?
I don't know like how to say it without saying like liquidity is liquidity. That's what I have in my head.
Liquidity is this ability to meet short-term obligations, right? Okay, so what are some of your short-term obligations? Think about it. Think practically.
Loans.
You run a business.
Like short-term
You buy
loans.
stock. Do you have to pay for that stock?
Yes.
When do you have to pay for that stock?
By the end of the year.
Yes, over the short term. Right, so if you don't sell anything, can you pay for that stock?
No.
Probably not. Then you're going to have to sell your stock to cover the creditors and the creditors balance. Does that make sense?
Yes.
Okay, so with short-term liquidity, as long as you know what it is, as long as you know what it deals with, then you can discuss it. And see, these are the different categories. There's the one, there's the other. Operational efficiency, do you know what that deals with?
How you operate and use your is it retained earnings efficiently?
No, not quite. Operational efficiency would be your debtors period, your creditors period. How soon do you pay them or how late do you pay them, right? Okay, profitability. Do you know what that deals with?
How profitable the company is.
Which means what?
How much sales they're making.
Yes. Income and expenses, basically. Sales and cost of sales, basically. Total income, total expenses. Do you agree?
Yes.
So gross profit, net profit, all of that. Okay, market measures. What does that mean? What does that relate to?
How the shareholders feel about you?
Basically, yeah. So external view on the business. So what's your PE ratio? Do you have dividend yield? Do you have earnings yield? Do you have a price to earnings ratio in terms of the market, higher or lower? Look at the market price of the equity. There's a lot of different ratios you could use there, but it's external, looking at everyone else and comparing the business to everyone else. Does that make sense?
Yes.
Yeah, so as long as so when you're asking me about revision, this is the type of revision I would want to do, especially for a ratio question. Go look at each section. Short-term liquidity, what can I calculate? Current ratio. Do you know what that deals with? Do I know what this deals with? Do I know what all of these deal with? Inventory turnover, etc. Right, and that's what you would need to do. What you could do is draw up a mind map. So basically, copy paste each formula on a mind map and then just remember that mind map and then try recreate it in the exam. Because you're not really going to go remember all of these paragraphs, but what you do need is the formulas. So I would just take the formula Take the ratio, write down the formula. Take the ratio, write down the formula on one huge piece of paper. And then on that one huge piece of paper, start memorizing the different sections.
Yes.
Maybe highlight this one section in one color, and then do the next section in another color, and do that for all of them. And then basically put together like almost like a mental mind map that you can study.
Yes.
Because you need to know the stuff. The only problem with the closed book exam is you need to know the stuff. That's the type of studying you would have to do, especially for this section. Okay, because when they ask you a question like this, discuss making use of appropriate ratios, calculated using the available information whether ZAD in BES should invest in S or DH. Okay. All relevant calculations must be shown. There is no need to recalculate ratios that have been provided. So obviously, you can't redo what has been done. You're showing different ratios. So now, if you look at the question, what ratios have they given you? Current, asset test, accounts payable, turnover. Can you redo those calculations? No. You're looking at what they've given you. Inventory, you could look at asset test. Asset test was given? Okay, it was given. I can't. Can I look at inventory turnover? Yes, inventory turnover. You've got inventory, you've got cost of sales. You can do that calculation. See, but now you're remembering it from what you've got. Does that make sense?
Yes.
Okay, you could probably work out profitability ratios here because you've got sales, you've got cost of sales. You can work out gross profit. You can work out profitability. Do you agree?
Yes. Yes.
Okay, there are other ratios you could work out, but you need to know what the ratios look like. And that's why I'm saying try generate a formula sheet with each section on a separate part of the diagram. So you can easily and carefully work it out. These ratios, can I work out? No, I don't have the total. I've only got the current. This ratio, I think, was calculated, interest coverage, right?
Yes.
No, it wasn't.
On top.
It's not here.
On
You
top.
mean over here? Yeah, but remember, this was only calculated for S. You can still calculate that for D.
Okay.
Okay, because here they've given, do they give you interest here? No, they don't. You can't calculate it. I don't see interest here. No interest here. See? Okay, next one. Operational efficiency. Can I work out gross profit margin? Definitely. Can I work out gross profit as a percentage of sales? Definitely. Can I work out profit for the period over sales? Definitely. Can I work out total asset turnover? Maybe. Do I have total assets here? No. I've only got current assets. I don't have total assets, so I can't. Do you see that?
Yeah. Yes.
Okay. Let's see what else can I work out. Return on total assets? No. You can't use that one. Equity, you can't use that one. Earnings per share? I don't think I saw that here. Yeah, there's no earnings.
No.
There's no per share. You can't work that out either. Okay, so it looks like they're focusing on profitability. Dividends? No. Market measures? No. So it looks like this question's dealing with profitability. Let's look at the memo. Yeah, there's inventory turnover. We spoke about that. You even mentioned that to me. Accounts receivable turnover, that's operational. That's an operational ratio. Okay, they don't even talk about profitability much here. I would have brought profitability in quite a lot here. Because you can work out profitability. The answer is quite short, actually. Yeah. But this is kind of what they're looking for. Based on the analysis, they would suggest that they should invest in S and not D. Okay, because you have to compare the two. So you'd have to do two calculations. How much was this out of? Wow, it's a lot. 15. I would do lots of calculations. Okay, we already spoke about all the profitability. That one you can definitely do because you've got information here. You can 100% work out profitability ratios for S and for D.
Yes.
Because you've got everything.
But thank you for the lesson.
Oh, okay. Are you happy already? Are you done? that too much
Yeah, my granny is calling me, and she said I must call her back urgently.
Yeah.
So I will have to go.
Yeah, that's fine.
We can do. I do want to practice some on my own.
Yeah, definitely. That's
And
very important.
For
Yeah.
some reason, our water shut off, so I also need to have a
That's
bath
hectic.
because I have no clue why the water shut off. It just
Yeah.
did. So maybe around 4. Is that okay with you?
What's the time now? Okay, yeah, 4 hours from now should be fine.
Yeah.
Yeah, just confirm with me on WhatsApp. But yeah, 4 should be okay. Yeah, that's fine. We could spend an hour, so
That's
45.
yeah. That's if I finish a paper or
Yeah, that's fine.
like something. And
Yeah.
plus, we still can work through question 2 as well. So,
Yeah, that's fine. We can
yeah.
do whatever you want to during that hour. That's okay. And then just remember, tomorrow I had to change the time. Hey, remember that. I think we're
Yes.
starting earlier. If
From
I'm not
2.
mistaken, we start at 2. Hey.
Yes.
Okay. Yeah. I'll check it again. But yeah. I just had to move it earlier so I can still cater for things later on. All right. But yeah.
No, it's
So
okay.
yeah.
Don't worry.
Let me know on WhatsApp.
Thank you.
If you want to still meet and discuss later at 4, we can do that. Just try maybe go through 1 or 2 things if you need to. And then, yeah,
Yes.
let's see what else we can cover
Thank
later
you.
on. Okay, you're welcome.
I really appreciate the lesson. Thank
Okay,
you. Thank you.
perfect. You're welcome. Thanks, Katrina.
Bye.
Okay,
Have a good
bye.
afternoon.
You too.